What if the most powerful system in the world wasn't collapsing loudly, but quietly slipping out of control? Not with breaking news alerts, not with sudden crashes, but through small decisions made far away from the public eye. Decisions in meeting rooms, in private deals, in agreements you will never see. For nearly 80 years, one currency has sat at the center of the global economy: the United States dollar. It wasn't just money, it was influence, it was leverage. It was the invisible force behind global power. If a country wanted to buy oil, it needed dollars. If a company wanted to expand internationally, it used dollars. If a government wanted stability, it stored its wealth in dollars. And because of that, one nation gained a level of control that history had rarely seen before. Think about it: the ability to print currency and receive real goods from across the world in return. The ability to influence economies without sending a single soldier. The ability to isolate entire countries just by cutting them off from the system. For decades, this system felt permanent, unshakable, untouchable. But history has a pattern. No system, no matter how powerful, lasts forever. And right now, that pattern may be repeating, because something is changing, not suddenly, not dramatically, but steadily. And for the first time since World War II, the dominance of the dollar is being questioned, not just by rivals, but by partners. This is not a story about collapse. This is a story about transition, a slow shift in how the world thinks about money, power, and control. And once that shift begins, it rarely stops. To understand what's happening, you need to step back. Because this isn't just about one currency, it's about who is challenging it. At the center of this shift is a group of nations known as BRICS: Brazil, Russia, India, China, South Africa. At first, this group didn't seem threatening. They were geographically distant, politically different, economically uneven. For years, analysts dismissed them. Some called them disorganized. Others called them symbolic, a talking club, nothing more. But that assumption came with a cost. It underestimated what happens when large economies begin to align. Because while the world focused on established powers, BRICS countries were growing, quietly, relentlessly. China became a manufacturing powerhouse. India became a technology and services giant. Brazil and Russia strengthened their roles in agriculture and energy. Individually, they were strong. Together, they became something much more significant. And then something changed. They started expanding their influence. New partnerships formed. New alliances emerged. Countries like Egypt, Ethiopia, Iran, and the UAE began strengthening their ties with the BLOC. Others, like Indonesia, showed increasing interest. And when you look at the combined weight of these nations, the scale is undeniable. Nearly half of the world's population, massive reserves of energy, critical minerals needed for future technologies, growing economic output. This is no longer a side group. It is becoming a parallel center of gravity in the global system. And once multiple centers of power exist, the rules begin to change. Most people assume that global finance is about money, but that's only part of the story. At its core, it's about trust. For decades, the global system worked because countries believed in it. They trusted that their reserves were safe. They trusted that trade systems would remain open. They trusted that access would not be suddenly removed. But trust is fragile, and when it breaks, it doesn't make noise. It spreads quietly. One of the most important moments in recent financial history came in 2022. Following geopolitical tensions, major financial actions were taken. Assets were frozen. Access to key financial systems was restricted. For many countries watching from the outside, this wasn't just a political event. It was a signal, a realization, because it raised a question that could not be ignored. What happens if this system is used against us? And once that question enters the conversation, everything begins to shift. Countries began reassessing their strategies, not out of panic, but out of caution. Because in global finance, dependence equals vulnerability, and vulnerability is something no nation can afford. So instead of reacting loudly, they began responding quietly. No country walked away from the dollar overnight. That would be unrealistic. The system is too deeply integrated, too interconnected, too central. Instead, what we are seeing is something far more strategic, gradual adaptation. Countries began exploring alternatives, not to replace the system completely, but to reduce reliance on it. Trade agreements started shifting toward local currencies. Bilateral deals began bypassing traditional routes. New financial infrastructures were quietly developed. China expanded its cross-border payment systems. India explored alternative settlement methods. Russia redirected trade relationships. Each move on its own seemed small, but together they form a pattern, a slow movement toward independence, not separation, but flexibility. And in global systems, flexibility is power. The energy lever, where real power lives. To understand why the dollar became so powerful, you have to look at something much more basic than finance: energy. Not stocks, not banks, not technology. Energy, because everything in the modern world depends on it. Transportation, manufacturing, electricity, food production. Without energy, economies stop. And for decades, there has been one unwritten rule in global trade: if you want energy, you need dollars. This system didn't happen by accident. It was built. In the 1970s, global oil trade became closely tied to the dollar. Countries selling oil priced it in dollars. Countries buying oil needed dollars to pay for it. That created constant demand. No matter where you were in the world, you needed access to dollars. This is what gave the dollar its unique position, not just as a currency, but as a requirement, a gateway. But systems like this don't stay unchanged forever, because over time, countries start asking questions. Is there another way? And slowly, that question is being explored. Some energy deals are now being discussed in other currencies. Not everywhere, not consistently, but enough to matter. China, now one of the largest energy importers in the world, has a strong incentive to reduce reliance on external systems. Other countries are beginning to experiment, not to break the system, but to create options. And once options exist, dependence begins to weaken. The slow shift, how systems actually change. When people imagine global change, they picture something dramatic: a crash, a collapse, a sudden replacement. But real change rarely looks like that. It looks slow, almost invisible. At first, nothing seems different. The same currency, the same systems, the same structure. But underneath, behavior begins to shift. More countries start trading in their own currencies. More agreements bypass traditional channels. More systems are built quietly in the background. Individually, these changes don't look significant, but collectively, they tell a different story. A story of gradual movement. Because systems don't fail overnight. They lose relevance over time. And by the time the shift becomes obvious, it has already happened. The psychology of power. Why this matters more than numbers. At this point, you might think this is all about economics, numbers, trade volumes, currencies. But the real shift is psychological. Because power isn't just about control, it's about perception. For decades, the dollar system worked because people believed it would continue working. That belief created stability, confidence, predictability. But once doubt enters the system, everything changes. Not instantly, but gradually. Countries begin hedging their risks, diversifying reserves, exploring alternatives, building backup systems. Not because they expect collapse, but because they want protection. And when enough countries do that, the system starts to evolve. Not because it failed, but because trust is no longer absolute. History's pattern. Nothing lasts forever. This moment feels new, but it isn't, because history has seen this before. Different times, different empires, different currencies, but the same pattern. Before the dollar, there was the British pound. Before that, other systems dominated global trade. Each one seemed permanent. Each one felt unshakable, until it wasn't. The transitions didn't happen overnight. They unfolded slowly, over years, sometimes decades. At first, they were barely noticeable. Then they became undeniable. And today, we may be watching the early stages of another transition. Not a collapse, not an ending, but a shift. A multipolar world takes shape. For most of modern history, the global system has had a center, a dominant force, a primary reference point. But what happens when there is more than one? We are moving toward a world where influence is distributed, where multiple systems exist at the same time, where no single structure controls everything. You can already see the outlines forming: a dollar-centered system in the West, a euro-centered structure across Europe, and an emerging network of partnerships across Asia, Africa, and the Middle East. These systems will not be isolated. They will interact, compete, overlap, and that changes everything. Trade becomes more complex. Alliances become more flexible. Decisions become more strategic. This is what a multipolar world looks like. Not chaotic, but layered. What this means in real life. It's easy to think this is all happening far away, in government offices, in international meetings, but the effects don't stay there. They reach everyday life, because when global systems shift, everything connected to them shifts too. Prices, jobs, opportunities, uncertainty increases, but so does potential. For businesses, it means adapting to new systems. For countries, it means balancing relationships. For individuals, it means something simple but powerful. Awareness becomes an advantage, because in times of change, those who understand what's happening move differently. Building toward the final shift. So where does this lead? Not to a sudden collapse, not to a single replacement, but to a gradual transformation. The dollar remains strong, deeply integrated, widely used, still dominant, but no longer unchallenged. And that changes the future, because the world is no longer moving around one center. It is reorganizing into multiple ones, and that process is already underway. The new infrastructure, building the back end of a new system. By now, the shift is no longer theoretical. It's being built, not in speeches, not in headlines, but in infrastructure. Because real power in finance doesn't come from announcements. It comes from systems, invisible systems, the pipes that move money, the rails that process transactions, the networks that connect banks across borders. For decades, one of the most important of these systems has been SWIFT. It doesn't hold money, it doesn't print currency, but it connects the global financial world. Banks use it to communicate, countries use it to trade, institutions rely on it every day. And that's exactly why it matters. Because if you are connected, you can participate. If you are disconnected, you are isolated. And that realization changed everything. Building alternatives, quietly, strategically. Instead of rejecting the system completely, countries began building alternatives, parallel systems, not designed to replace everything, but to create independence. China developed its own cross-border payment network. Russia created alternatives after losing access to Western systems. Other countries began linking their domestic payment platforms. Piece by piece, a second layer of global finance started forming. It doesn't dominate, not yet, but it exists. And existence is enough to change behavior, because once countries know there is another option, they no longer feel completely dependent. The idea of a new settlement system. At the center of many discussions is a simple question. What if countries didn't need a single dominant currency to trade? Not a replacement for everyday money, but a system designed specifically for large-scale international transactions. Some proposals explore using baskets of currencies. Others focus on commodities like gold. The goal is not to eliminate existing currencies, but to reduce reliance on any single one. This idea is still evolving, still being debated, still being tested in different forms. But the direction is clear. More flexibility, more options, less dependence. The moments that signal change. Big shifts rarely come from one event. They come from a series of moments. Individually, each moment seems small, but together, they tell a story. New trade agreements signed without using traditional systems, payment platforms connecting across borders, countries experimenting with digital currencies, central banks exploring new ways to settle transactions. None of these moments make global headlines on their own, but they matter because they show intention, and intention shapes the future. The Global South, a different perspective. To fully understand this shift, you have to change perspective. Because not every country sees the system the same way. For many nations in Africa, Asia, and parts of Latin America, the global financial system has always been something they had to adapt to, not something they controlled. Access could be limited, costs could be high, decisions were often made elsewhere. So when alternatives begin to appear, they don't just see risk, they see opportunity. Opportunity to trade more freely, to reduce costs, to gain more control over their own economies. This is one of the strongest forces driving the shift, not conflict. Security versus control, the hidden trade-off. Every system offers something, and every system asks for something in return. The dollar-based system has offered stability, liquidity, and global acceptance, but it also comes with influence, rules, oversight, control. Alternative systems aim to reduce that control, but they introduce new questions. Will they be as stable, as trusted, as widely accepted? This is the trade-off shaping the future. Not a battle of good versus bad, but a balance between control and independence, and different countries will choose differently. What the data quietly shows. If you look closely, the numbers tell a subtle story. The dollar is still dominant, still widely used in global trade, still central to financial markets. But its share has gradually shifted over time. Other currencies are being used more in certain regions. Central banks are diversifying reserves. Gold purchases have increased in recent years. None of these trends point to sudden change, but they do point to direction, and direction matters more than speed. The system doesn't break, it evolves. One of the biggest misconceptions is this, that one system will suddenly replace another. History suggests otherwise. Systems evolve, they adapt, they coexist. The dollar doesn't disappear, it adjusts. New systems don't dominate immediately, they grow. Over time, the global structure becomes more complex, more layered, more interconnected, and that's exactly what we are starting to see. The real shift, from dependence to optionality. If there is one idea that defines everything happening right now, it's this: optionality. For decades, many countries had one primary option. Now they are developing more. They are not abandoning the existing system, they are reducing dependence on it. That might sound small, but it changes everything. Because power doesn't disappear when alternatives exist, it redistributes. Building toward the final conclusion. So what does all of this mean? It means we are not watching a collapse. We are watching a transition, a slow rebalancing of global power. The dollar remains central, but it is no longer alone. New systems are forming, new relationships are emerging, new strategies are being tested, and all of it is happening quietly, behind the scenes, in ways most people never notice, until one day the system looks different. Here's the truth most people don't want to say out loud. The dollar isn't collapsing tomorrow, but it's no longer untouchable. For decades, there was no alternative. Now, there is, and that changes everything. The BRICS nations are not acting out of emotion. They are acting out of strategy. They understand something very simple. You don't destroy a system overnight. You build a better one next to it, and let the world slowly walk away. That's exactly what is happening right now. A parallel financial system is being constructed, quietly, deliberately, piece by piece. New payment rails, new settlement systems, new trade agreements, new alliances, all designed with one goal: reduce dependence on the dollar. Not eliminate it instantly, but weaken its dominance over time. Even countries deeply tied to the dollar are preparing for this shift. Why? Because no nation wants to be in a position where its entire economy can be frozen, sanctioned, or controlled with the flip of a switch. So they hedge, they diversify, they build Plan B. And once enough countries adopt Plan B, Plan A is no longer the only game in town. Now here's where it gets real. Political pressure is rising. There are already warnings, threats of tariffs, trade restrictions, economic retaliation. The message is clear: stay in the system or pay the price. But here's the problem. What happens when the countries leaving the system represent nearly half the world's population, control massive energy reserves, and dominate critical supply chains? At that point, pressure loses power because the balance has shifted. This is not just an economic story, it's a power transition, a slow, complex, global rebalancing. And history tells us something important. These transitions are never smooth. They are messy, unpredictable, and often expensive. But they are also inevitable. So where does that leave you? Not in fear, but in awareness. Because the biggest mistake right now is ignoring what's changing. Money is not just currency, it's influence, it's control, it's strategy. And the rules behind it are being rewritten right now, in real time. The dollar is not dead, but its monopoly is over. The era of one dominant financial superpower is giving way to something new, a world of multiple centers of power, multiple currencies, multiple systems, a multipolar economy. And for the first time in nearly a century, the future of money is no longer being decided by one country. So stay informed, stay adaptable, stay ahead. Because the next transaction you make might not just be a payment, it might be a signal of which system you're part of.